What's going on, guys? So let's take a little look at the market. First off, I want to take a look at the triple Qs, the NASDAQ 100, because again, if you're part of my Discord or been watching my YouTube video, you know that predominantly the stocks that I like to trade are a part of the NASDAQ 100. So just going to kind of dive in today. We did finish pretty much flat, only up $1.08, 0.28% on the day. We did close at 390.59. Currently after hours, we are trading up a little bit. I am reading on social media that a lot of people are getting excited about, the futures are ripping, the futures are green, this, that, and the other. To be quite honest, none of that really matters. Okay. The futures could be up 100, 150, 200 points overnight. Come to market open in the morning, they immediately sell those into supply. The stocks that gap up, they sell it right into supply and then sort of fade the rest of the day. Realistically, if you're a bull, you don't really want to focus too much on, the futures and the pre-market being so sky high. Anytime that really happens, you're going to kind of have to wait a little bit longer to kickstart your day. And what that means is that as soon as, you get that big gap up, you're going to kind of have to wait and let that first hour candle close. And then you're going to need that confirmation of those highs. Okay. My sentiment today was sell bias. I did only put on 2 trades. That was a very, very short scalp on Amazon to the downside, as well as Tesla as well. However, I did have 6 stocks on my watch list to the downside. Most of them were coming from the semiconductor sector. I had AMAT, Qualcomm, AMD, NVIDIA. None of them confirmed. They all dead cat bounce today. So stuck to my trading plan. I was just looking for very, very small moves. I was looking for the bigger continuation on the flush, but we did get a little bit of a bounce today. However, we did pretty much close inside bar from yesterday's big sell-off red candle, that big pullback candle that we had. And to be honest, it doesn't really matter what the futures are doing because we're still closed, and we did close under the 10-day moving average. So yesterday was the first close under the 10-day moving average. Today, we did attempt to retest that 10-day moving average. However, we were rejected and we closed below the 10-day moving average. So, my bias can change, from sell bias to neutral to long biased fairly quickly. So if the market does continue to rally overnight into the pre-market, we do get that gap up, and then we do get that sort of confirmation candle on that second hour candle, and there's measured potential in a possible trade, meaning that we're not right sitting at resistance, right at supply, and there is room to go long. I will take some scalps to the long side. I am still looking for the flush to the downside. I still think that we come down into that 385 range, which is a 20-day moving average. If we just look at the chart here, going back to around September, we had all of this choppy action, and I can pretty much, scroll a little bit back here so we can see it a little bit more clear. These highs here, I'm just going to draw a quick trend line, and you're going to see that this is going to match up perfectly with the 20 moving average. And the 20 moving average is the purple line on my screen, this line right here that I'm kind of hovering over. You can see here with this line that I'm drawing here, this consolidation that we had going back to August and September, okay, all in this area here. Maybe it'd be a little bit easier if I pulled up my drawing tool. Okay, so this price action here was the highs back in September, okay? So when we did finally break down, when we got rejected off of this area here and we broke down, as soon as the triple Qs reclaimed the 50-day moving average, which was here going back to October, we've been on a pretty much straight run up. So what I am looking for in all of this nasty price action that we've been having is to sort of come back down here into this 20-day moving average range and the linear regression channel. You can see it's going to correlate almost perfectly with these prior highs. So what I would like to see here is, okay, let me move this over a little bit and take off all of these drawings really quick. What I would like to see here is a little bit of a back test to the 20 period moving average, maybe 1-2 days sideways, and then make that next push higher. Okay, this I think is going to be the start of the next leg up. I think that if we do get this push down in this vicinity, that's going to correlate with this previous resistance that is going to act as support, I think this is going to be the opportunity to load. I wouldn't start putting on any swing trades as of now, just because of the market's going to be up and down while we're going through this process. I would wait for us to test this area, bounce off of it, sort of reclaim with the daily higher high, and then feel confident about putting on some swings. We might not just go in a straight line up. It might look a little bit more something like this. So we might come down, test this area, kind of bounce up, you know, kind of push here, get some resistance in this area, fade, and then go like make that next leg. That's what it could look like, something that I would be looking for here. So from a scalper's perspective and a day trader's perspective, what I'm looking for tomorrow is a flush on the triple Qs. 390, anything below 390, we do have room to that 385 area. I will look to take some scalps there. I'll be watching some of the stocks that are currently sitting at support, that haven't reclaimed any supply, that are kind of just down there at that, you know, moving average demand zone, looking for things that possibly can fade with measured potential. If the market continues to stay green and we can confirm this 392.65 today's highs, which would be reclaiming the 10-day moving average, I would look to try to take a possible long, but the chart setup has to be there. Okay, so I'm going to go over some charts. I'm going to put out some more YouTube videos. I just kind of want to give you guys the overall sentiment on how I'm thinking and how I'm approaching the market. I am going to continue to size down. So I'm just going to use a very general example. If you're going long with 5,000, 10,000, let's say you're going long with 5,000, maybe you want to go long with about 2,000. If you're going long with a $10,000 account, maybe you want to cut it down to maybe, you know, anywhere from 4,000 to 6,000. If you've got a $1,000 account, instead of, you know, maxing that $1,000 account out, maybe on 1-2 contracts, or even playing $500, I try to minimize that down to anywhere between $200 to, you know, $400 worth of risk. So that way, even if you do get faked out and you hold and your emotions get the best of you, and let's say that contract or that position goes down 30-40%, you know, you're not going to be too stressed. The last thing that you want to do as a trader in a market like this, before we kind of figure out the overall direction, is oversize yourself, force trades, and then when you do that, be so oversized that to where if the move goes against you, now you're constantly just have your eyes glued to you know, the monitors and the charts, and every tick down is just, you know, creating a bit of anxiety, or, you know, this pressure of, you know, you're hoping and wishing that the stock goes in your favor. I'm an options player, so I'm just going to speak in options terms. Let's say you have a $1,000 account and you're a relatively newer trader, and you put on, let's say, you know, a call option on Tesla, and that call option is anywhere from $800 to $1,000. If it starts to go against you, even though the trade technically is still in play, and that trade goes against you and it has not broken any technical levels, you might be down $200, $300, $400 on that actual contract before it bounces off that support or breaks that resistance and makes that high. So you might actually stop yourself out before the move. However, there's a possibility that the move could fail and you could potentially go down $300, $400 relatively quickly. And if you do have a $1,000 account and you just bought an options contract for anywhere from $800 to $1,000, to lose that $300 or $400 on that account is massive. It only takes 2 or 3 of those trades and your whole account is blown up. So if you do have a $1,000 account, I would say stick to smaller stocks, you know, stocks that aren't going to cost that much in premium. I'll give you a couple examples, being that I do trade the triple Qs. Again, there's going to be small cap stocks out there that have options contracts that are, you know, relatively in your price range, but I'm just going to speak from the stocks that I currently trade, the stocks that I know. AMD, you can pick up contracts anywhere from $100 to $200. Apple, AMAT, Facebook, even sometimes you can go a little bit outside the money. I'm not talking way out of the money, but maybe just right outside the money. You can possibly pick up contracts anywhere from $200 to $300. There's a bunch of different stocks that you can go. I would try to stay away from stocks like Nvidia, try to stay away from stocks like Amazon, stay away from stocks like Tesla, Netflix. Some of those big high flyers aren't going to be the kind of stocks that you're going to want to be playing. but that's just an overall view. So even if, let's say you take an options contract and it costs $200, that move works against you 20%, you know, you're really not going to be feeling that big pain. You might be down anywhere from $20 to $40 on that actual play. You just cut it, walk away. Think about how many plays that you can get under your belt with $1,000 account. You can play, if you have a cash account, you can trade 2, 4, 6, 8, 10, anywhere from 3 to 5 trades a day that cost anywhere from, you know, $150 a contract up to $300 a contract. And if you have a good strategy, you have good risk management, you might come out on top 3 out of 5 trades, 4 out of 5 trades. And that 1 or 2 losers that you have, if you minimize that risk and cut that loss at, let's say, $20, $30, $40 loss on a $200 contract, then potentially the winners, you're taking $40, $60, $80, $100 on those contracts. So you can kind of see how those wins can start to compound versus over the small losses. Versus if you go in and play, you know, let's say a $250 contract and you allow it to break down technically and come all the way down. And let's say you lose 60, 70% on that contract. Now you're losing $100, $120, $130 on that actual play. You have a string of 3 or 4 of those, and now your account is significantly smaller. I hope that kind of makes sense. I am going to be releasing a lot more videos on the stocks that I'm going to be watching for tomorrow. Just want to kind of give you guys an update on where my head is at and what I'm thinking going into tomorrow. So I am not so much short biased, not so much long biased. I am pretty neutral. I'm going to let the first hour of the market play out, kind of see what the sentiment is. Do we have this big gap up, and where did we gap up? For example, are the triple Qs going to gap up into this 5-day moving average at 390, 394.42 and then immediately get rejected and start to roll over? If that's the case, I'm going to be looking for shorts. If we gap up into that 394.50 area and that second hour candle comes and we're able to confirm, and some of the stocks that I'm going to be looking to play are also oversupply, and if they confirm have measured potential and room to run to the long side, I will take part in those. However, if we do get stuffed at the top of the range and we start to fade, I will be looking for shorts through that first hour candle's low. Okay, just you know, throwing it out there. Guys, if you like this video, subscribe to the channel, do me a favor and give me a thumbs up on this video. It would really help me out. I'm trying to get these videos out to more people so they can see them. Also, you guys can join my Discord. I have 2 sections of the Discord, one completely free section with about 8 or 9 channels in there, as well as a paid section as well. Also, do me a favor, check out my website, evolutiontraders.com. Have a look around, see if there's anything that interests you. And until next time, I will see everybody on the next video.